Big tech stocks earnings today, including Microsoft. What's it currently trading at? $480, up from around $440. EGFs, oh, they're pretty strong, 10% and plus 17% forward. So it's definitely going to have an earnings beat. Well, you can never say definite, but it looks like it's going to have a pretty good earnings beat, and it should have good guidance as well. EGFs, 70%, moderated, better than Meta's. Forward 16%, that's a lot better than Meta's. So this is definitely one stock you want to buy on the dip. Microsoft, it's fair value current and cheap forward, and a strong earnings growth. It's a lot better than Meta, a lot better. Okay, let's take a look at the chart. What's the chart say? Microsoft, here we are. Okay, here's the Microsoft chart. So the first objective for Microsoft's bear market was 455, which was achieved. That's a near 20% drop. When I bought the dip, I actually started buying around there all the way down via limit order. It went quite deeper than I thought. 438, dip below 4. I thought it was 442. Anyway, it had a pretty good dip to buy on. Now it's recovered in anticipation of earnings, which will beat. So it could spike higher to 510. If it does, I'll be trimming. So the second objective for the bear market is around 421. That will take it about 25% lower, and I'll definitely be buying that dip. So I'll trim lightly some of what I bought. Should it go up to around 510, and I will definitely buy the dip once it resumes its bear market. But like I say, it's got pretty good metrics. And then the third objective would be 340, and this is what I would consider getting lucky. The trend between 420 and 340 is a case of getting lucky. So you can imagine I am not waiting for 340 to buy Microsoft. I'm already buying and then trimming, and then I'll buy again and then trim again and then buy as low as it'll go. So how could it play out? Let's take a look. We've had a down. Now we're getting a bounce. It's about here, and it could carry to here. And then we get the next leg lower to 420, and it might carry a little bit before we get another bounce to around maybe 460, and then we get the final sell-off when everything sells off. And if you get lucky, it goes to 340, but I don't know. I think 366 is doable, and then we get the next bull market. So that's how it could play out roughly. Don't take this as a forecast. You know, it's not a trend forecast. It's just how it could play out in terms of targets. Like I say, the target is 420, next target, then the final is 340, which it's going to take some big panic event to see everything dump that low. It'll probably, I think it's going to be, we're going to get lucky to see under 400, much under 400. It might get to maybe 360, 370, and if you get lucky, 340. So I'm already buying. You know, if it falls again to 450, I'll be buying again. Falls to 420, I'll be buying, and if it rises back to say 450, I'll trim some of what I bought, same as I'm trimming what I bought on the dip to 440. Right, if it goes to 511, which it looks like, if it's going to have such a good earnings beat. With Microsoft, it's a case of everything else pulling it down. Yes, it was overvalued there, but it's got strong earnings growth, which means what's expensive today becomes cheap in the future. Look, it's there, it's here in the PE range, current and forward. Look at it. That means if the stock price does not change, in 1 year's time it will be 16% of its PE range. If it stays at 480 and earnings continue to grow, then it will be at 16% PE range, which will be dirt cheap for Microsoft. So time is working in Microsoft's favor, which means when you get the opportunity, you take them. You don't piss about, saying, oh, I'm going to wait for my 340 and then I'm going to buy. It gets to 340 if you get lucky. So I am buying, well, I did buy it around 460, I think, and then I bought it and I've just trimmed a little bit, and I'll continue trimming a little bit, not all of what I bought, just a fraction, and then it should resume its downtrend. 420 I'll target, I'll buy on the dip below 440 and then we get another bounce that I don't know what it'll be, I'm guessing 460, and then we get the final downtrend, which should be, along with the rest of the market, pulling it down. If it was left to its own devices, it won't fall below 420. It needs the market conditions to pull it down, to reduce the PE of the whole market. That will pull Microsoft below 400 towards 340, where I suspect if the market falls, we will see it below 380. So you're going to get this opportunity to buy in this area, so don't blow it waiting for 340. A lot of people, when it falls, they think it's going to fall a lot further, and they completely miss the bottom. When all you need to do is just accumulate and distribute, accumulate, distribute, accumulate, distribute. I'm not saying distribute the whole lot, because you're building a position. I'm still hold Microsoft. Look what I got. 0.4% of portfolio. So it's going up. It was 0.3%, now it's 0.4%. I haven't bought much, but I bought enough to play the game. By this time, I would say if it fell to 370, I would say it'll be at least 1% of my portfolio. 340, 1.5%. 300, 2.5%. Anyways, that's Microsoft earnings and rough trend expectation. I don't like these sort of, I prefer these, so you know where the target is. 455 done, 420 done. You don't know when it will be. It'll be now, in a month, 2 months, 3 months, you don't know. And if you get lucky, you see 340. I know what's going to happen. Patrons are going to be there going, oh, Nadeem, you said it's going to go 340, but it bombed at 390. Oh, you were wrong. Well, you don't know what you it's just exasperation. I get exasperated. If people fixate on a price. 340 is if we get lucky. It's not a done deal. Even 420 is not a done deal. You could have an epic beat and then it'd be back to 550. It could. So those who bought here will be smiling, as those waiting for this will be crying. Same, I think 420 is doable. So once it gets there, I'll be buying more than I bought here on this dip. On this dip, I will be buying more because look, I've also sold some on the rally, so I'll have more ammo. So I'll buy more on this dip and then sell some on this rally and then buy a lot on this dip. Triple my position probably. And then just sit back and relax for a few years and sell for a decent profit, at least 50%. More, maybe 200%, 100% profit. I mean, Yeah, so that's Microsoft earnings. I'm on a roll today. I'm doing quite a number of videos. And this video is a mere fraction of my extensive analysis that is first made available to patrons who support my work. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $9 per month, which is nothing compared to what you get access to. I try to do best by my patrons. Folk only need to go read my articles open to the public and the literal thousands of comments under them. Look at this one, 2,200, nearly 2,300 comments under this article, which shows the level of engagement with patrons. Keep calm and carry on buying AI tech stocks as they deviate from their highs. Where the greater the deviation, then the greater the buying opportunity presented. Keep calm and carry on buying. Quantum AI tech stocks. Access to my latest mega analysis, a comprehensive 3-part guide on how to really get rich during 2020 that has exclusively been made available to patrons right now. You can go and read the 3 guides right now, full access, which is a truly epic piece of work that took me the whole of 2023 to write, which condenses down my lifetime knowledge and experience down to some 60 chapters, which is on top of my ongoing analysis and trend forecasts that are made available to patrons for just $1 per month. There are no bolt-on extras, no courses, no other crap that all these con merchants do. You get full access to everything. So, did you buy the October 22 bloodbath, especially in tech stocks, fangs, with the likes of Meta plunging below $100? Well, I and my patrons did. Go read my articles and the comments posted under them. We got well blooded by catching all those falling knives. Did you make the mistake of listening to the likes of Clown Kramer on the Cartoon Network, who stated Meta, amongst others, was finished? Meta finished at $100 a share. It was the mother of all buying opportunities. This clown stated it was finished. Says it all about Clown Kramer and the Cartoon Network.
They're finished. They're finished as places.
They're finished. They're finished as
places to invest.
We keep talking about this falling knife as if the knife continues to fall. Though there are people who
I'm just saying. Look, I'm looking at the money coming out. Where's the money coming from to buy to buy industrials? It certainly isn't coming from new people saying, "Wow, it's time to put money in the stock market," because they get such a great rate on the 2-year. I think it's money coming rotating out of companies that have dominated this market for the last decade and into companies like Caterpillar who actually know what the hell they're doing.
Are you thinking that the tech companies that I think that you're disappointed in are going to get religion, if you will, and get disciplined? And what does discipline look like?
You know what they are? I would call them atheists. They believe in nothing.
That's a nihilist.
Meta? I don't know. I think they have to change the name again. They really do. I mean, you can't be saying Meta. I don't know. How about loser? How about Stuputa? I don't know. Anything doesn't even matter. I don't know if they can make a comeback. The facts have changed, and I have to change with it. I believed. I thought I'd be safe. I was wrong. Bottom line, forget being leaders. Big stocks are now followers in a post-COVID era, where we're learning that their earnings were far more inflated by the pandemic than we knew. We're just now discovering that tech emperors have no clothes, if they're even emperors at all.
So at least give it a try. Read the comments, see the depth of analysis. You won't be sorry because I do my best by my patrons. Go that extra mile. Gaining access to over 35 years experience, right from before the 1987 crash straight through to this stock's bear market that will ride the quantum AI megatrend into the future.